So I'd start with four, and let's kick it off with market context. The market context in which we have operated as banks is no longer the same. If you look at the interest rate regimes, if you look at the pricing regimes, they don't look anything like they did 8 to 10 years ago. And the banks have to now operate within that market context and create a response on a much lower cost to income ratio, a compressed return on equity, which means they have to start adapting their models and creating that response. The second aspect that I would discuss is that of the changing customer need. So the customers are starting to view corporate banking much like they view the retail bank offering, which means what? Effectively means they have very little or low tolerance for unavailability. They expect the pricing to be customer friendly, they expect the availability to be always on, and they expect for us to be able to deal with them and the times when they want to deal with us. The third piece is connectivity. If you think again, in the traditional banking models, we would dictate to the clients what channels they could use, what files they could send to us, but that's fundamentally changing. The clients now expect the banks to respond to them on the channels that they have and the channels that they are comfortable using. Equally, I don't think the clients have the time or the patience to wait for programs of work that take tens of years to bring the proposition back in front of the client. They're expecting a rapid response, which means the banks have to think fundamentally differently around how do you use existing technology and assemble a response back to the client. And the last, but certainly not the least, banking is no longer just for banks. If you think about the fintechs and how they're starting to affect parts of the value chain within banking, again, it requires the banks to start thinking about, well, what do we do if somebody comes in and starts disintermediating or disrupting a piece of what we traditionally used to do as banks? So those be the four I would put down as four factors that we need to consider as we revise the banking models in the future. So at Standard Bank, here's what we've done. We've started the world with reimagining it. Think about if you're creating a transaction bank using the first principles and not by analogy. Think about if you were in a brand new market, what kind of transaction bank would you look forward to assembling and delivering to the corporate client? So the first aspect is reimagine it. Step into the client's shoes and think about what role they expect the bank to play in their life. Then redesign it. Don't start from what you have, because if you redesign from what you have, you'll have a better variation of what you currently have. Redesign it using first principles. If that's the role you're playing, that's the kind of bank you want to put in front of the client. Then assemble the response. Do not build it, because if you're going to build the response, it is going to be using a lot of legacy tech, it is going to take a lot of time, and it'll take forever to get in front of the client. And the last point that I would make is try and understand how all of this works together in creating a response to the client that helps them grow their business. How do you embed yourself into the client's ecosystem and actually help them deliver their strategic aspirations, their growth aspirations, and make them winners in the industries that they're operating in? Actually move away from banking. Just think about partnering a client and helping them grow in the industry that they're in. So one of the factors that the corporates starting to engage the banks on is the advent of fintechs. So here's what the fintechs have done. The fintechs have looked at and recognized a particular niche in a corporate life cycle, have used technology at a low cost to create a very specific response to it. And actually, it's left the banks wondering where that response actually came from. And now the corporates are looking at the banks and saying, if a particular fintech in the industry with such low levels of entry, with minimal documentation and such low price can create that response, what can you as a bank that I've banked with for tens of years do in response to that? Here's an interesting view on fintechs. There are certain banks that look at fintechs as direct competitors. So when they view a fintech, they see somebody that is actually going to be competing with them directly. We've taken a slightly alternative view. Our view on fintechs is they've got a niche, they've got a technology that delivers to that particular niche. How do we at Standard Bank partner those fintechs and assemble a response back to the client and make their life simpler? And it goes back to a little bit of what I said earlier. What the corporates are effectively looking for in banks is banking, not necessarily a bank, because their view is It's a functionality we want you to perform, a role we want you to play. We're not particularly fussed in the manner that you do it, and actually we would prefer if we were not doing it in a branch.